Hey guys, I hope you had a decent day, even though the market again rallied right up to the level and then went flat. And that was due to the monthly risk lines that have not been breached. And you still see the divergence between ES and NQ, where ES is above NQ, even though all of the growth that's come into the market is due to AI and NQ. Um, Interesting. But so there really wasn't any movement today. Again, another flat session. I have went ahead and posted my comments where I think that we're going to be flat forever because they're not allowing the money that was in the equity market to come back. It's in money market funds supporting buying treasuries and repo market. So with that said, the VIX traded right down to the PT3 range and stopped. These are point ranges, um, and from high to low, the Jats level on the chart are different. They measure from the open or the close, up and down. So you can get the PT1 level off of the open and close, or you can use the point range from high to low. And when they confluence like this, it can often signal that's where the dealer is going to turn around the market. And that's exactly what happened today because it ran into their risk line that we know that they're holding because they're not letting the market move higher so far. I want to point something out to you while I've got you as I just posted this. You want to go check my post out on X. These are the min-max indicators. So it gives you the maximum and minimum of your 14 period range, the highest high or the lowest low of a 14 period range. And what you can do, very interestingly, is you can set these to different time frames. So here is a 30-minute. You can change your input series. First, you have to change your data series and add 15-minute, 30-minute, 60-minute, or whatever you want. You could put daily, weekly, or um, whatever time frame, 5 minute, 1 minute. And you can see that the market trades between a 15-minute, a 30-minute, and a 60-minute range all the time intraday. So I've got the 15-minute as the first level. See how the market pulls first back to the 15-minute? And then the second level is the 30-minute. And then the third level, that's your 60-minute. So check that out. It works much better than the Bollinger or the Donchian channel for the reason that, well, if it's a different calculation, this is just strictly the high and low of 14 periods. So it gives you that benchmark that works so well with Jats PT. Most all of your indicators are based on a 14 period range. And for the market, the way the market is structured. So you can put it on any time frame, but I was going to see yeah, you can change the period also. So if you wanted to change the period to a 1 period or a 5 period. So, it is, excuse me, you can also change it from on price. I'm sorry, just sneezing. I'm sorry, I didn't want to sneeze in your face. You can set it to on price change as well, and that'll get you the current bar. So give that a try. Give me one second. Give that a try and see if you like it as much as I do. I use my median indicator for the middle, but you could use a SMA or the donkey and midband or anything like that. I put my median indicator also on the time frames, 30-minute and 60-minute. So you can see here a 30-minute median holds a trend really well for a trend trading strategy. This lower one is the 15-minute, but that 30-minute really is a good trend following signal. But anyhow, so we're sitting on this upper monthly one, and so far the dealer is not compelled to move it out. The 2050 is now, or 20 is now the current max pain, and they've moved it from 18 up to 20, and 21 is next week. So we are moving higher in volatility. They're going to be bringing this down. The volatility did shift today, but that, see, the R vol shifted higher. It used to be inside, now it was outside. So I'm expecting the volatility to continue rising. So unless we go long ball long, which can happen, unlikely, but can, we're going to be coming back down. Um, so we'll see how far my thesis holds, whether the market comes down so they can justify those 4.5% rates that they're giving the Buffett investors after the markets rallied up 25% from April. Um, I know that they've got egg all over their face, but we'll have to see what Powell says next week about the interest rates too. He'll probably hem and haw and say that, September is what they've priced in so far. Let's check again. I haven't checked since the 20-year auction. Let's take a quick peek at see if any of that has changed. So no change for the current period. And no change for July. No change at all. or yeah, and September even came down. Look at that. September came down. Well, 58%. It was high. I think it was higher. 425 to 450 and yeah, so it's 58%, maybe a little bit more, 58% for September. But that's it. I mean, they're not pricing in any cuts. This is just pathetic. There's no justification for keeping cuts on the table. I mean, what ridiculousness is there to keep justification away from cutting rates? It's beyond me. I mean, there's no reason to have tight liquidity right now. They keep saying they're data dependent, and then when the data comes in that shows that they don't have to, keep a tight monetary policy, they won't loosen it up. It's it's nuts. So anyway, because it would hurt. The reason is because it would hurt the investors supporting the treasury market. They would want to be participating in the equity market, not getting 4.5%, 5% for their effort for being, I guess, patriotic because their whole system has failed. Um, they can't attract foreign investors this way, so that they want to flatline the equity market so it doesn't grow as fast. And it's it's really sad to see because you probably don't remember before the great financial collapse and before COVID. Well, even though it was the Fed bubble of the dot com, but the 70s were bad, inflationary, but the 80s and 90s we had really good S&P 500, and the 80s weren't dot com, and the market grew, but the 90s they really did. The market went exponentially higher. That was the bubble. We had the bubble for Tesla. We had the bubble for FTX. We had, many different bubbles, but we would like to see organic, real growth. There's a ton of capital in the US markets at the current time period, and they're not letting the stock market show the growth. The market wants to go higher and it's locked down. The dealer is not compelled to move the risk out. So we will see what happens. There's not really any news tomorrow, so not sure what's going to happen. Maybe they'll allow it to. I don't know what they're going to do. There's no really news event for tomorrow, so nothing to propel it to break that risk line is what I'm trying to say. And we do have a concern with Iran and Middle East tensions still, I believe, on the table. I have not listened to the news this afternoon, so I could be wrong. I'll have to check that. Okay, well, this is it. Just stay, keep your powder dry. We're on our risk lines. The market is just sitting here, not selling off. There aren't any really sellers, but they're not able to go forward. So I have seen pins sit on a pin for many days, 8, 9, 10 days before. So this few day pin isn't really much. It can sit here tomorrow and wait for next week. through the Powell Fed decision. So we'll see what they do. Thank you so much. Y'all have a good night. We'll see you tomorrow.